So welcome back to the module number 3 in our mini course. This mini course is entitled Catching Market Tops and Bottoms Using Elliott Wave Theory. And module number 3 itself is how to identify the maturity of trend within an Elliott wave structure. So Elliott wave comes in both motive waves and corrective waves. Motive waves are 5-wave movements. These define the dominant trend. They're labeled variations of 1, 2, 3, 4, and 5 on the main labeling. It's common within motive waves for wave 3 or 5 to extend, and I'll show you how that happens. And we'll also go through Fibonacci relationships between waves and giving price targets for possible completion of waves. Corrective waves are the other type of wave. They're 3-wave movements against the direction of the dominant trend. So they're labeled either ABC or WXY, and ABC would be a simple corrective form, and a WXY would be a complex corrective form. So corrections are overlapping and undecided. Corrections happen against the impulse of the market, what the market desires to do. So they tend to happen with a lot of trouble and a lot of trauma, basically, in the price structure. Any particular move tends to be retraced to a large degree, and the overall correction will find it very hard to make any inroads into the price at all, and anything it does achieve will be in a very troubled way. And I'll go through that with you on the chart and show you how that plays out on the chart itself. So corrections, they retrace on average about 50% of the trend move, and they support usually comes in around the previous 4th wave, and I'll show you how that happens. So we'll go through motive waves, corrective waves, using again the dollar-yen example, and how to predict maturity of any particular type of trend. So let's get on in there and we'll go through how to identify maturity of trend. Okay, so here is our dollar-yen chart again, and this is weekly bars. And the first 2 videos we have defined the dominant trend, and then we defined a correction. So we defined the dominant trend as upwards in a possible A, B, C corrective rally overall. This is a long-term trend, so it's obviously weekly bars, so it's taking years to play out. So what this dominant trend suggests for the future is a rally in wave 3, which I think at this stage we've probably begun, but a rally in wave 3 and probably peak out somewhere around the 140, 145 level, somewhere there. So let's go through defining maturity of trend, which is what this video is about. And here are some techniques that you can use in order to get a grasp on how far along your trend move is. So what we've decided already is that this is an ABC correction to the upside. So we'll work with that. First of all, I'm going to get a trend channel. A nice ABC zigzag correction should fit within a nice trend channel. So we'll start at the very low, and we will project the bottom line of the trend channel to our wave B low. So we want to connect the very beginning of wave A at the very extreme price low at 75.47 there. And we want to get the line to be tangential to the bottom of the B wave here. So then we'll grab the top line and connect it to the top of our wave A. Now that gives us a parallel trend channel. Now the next thing we're going to do is I'm going to take a trend line and extend it the length of the full A wave, and then I'm going to project it from the bottom of the B wave, and we get a tangent point here to the top. Now let's just read that price to see. Now that price comes in at 148.64. Now that would be where a wave C would equal the length of wave A. We don't know what's actually going to happen, as this market moves on. This is the kind of the broad stroke best guess scenario. So we've defined the dominant trend as an ABC correction to the upside. We figured that wave A is over. We figured that wave B is most likely over, and that we are moving now into a trend move again in wave C. The trend should take at least 3 waves. So we are expecting this upward rise in wave C. So right now we know that this trend is quite immature. It's nowhere near complete yet. the overall trend move should move to the upside in a rally in wave C, which would take us up to the 150 area. I wouldn't be surprised to see it pop out over that top trend channel there. If it's a simple zigzag correction, we'll just go a little bit deeper here. If it's a simple zigzag overall trend move, so that would happen in a 5-3-5 form. So wave 1 would be wave A would be 5 waves, wave B is 3 waves, and wave C would happen in 5 waves again. So let's throw in some labels there to what we might expect to happen in a rally in wave C. We get a 5-wave move to the upside to complete wave C. Now, how does this help us in our overall trading and charting in general and market analysis? Well, knowing where you stand within the overall trend means you can orientate yourself towards planning to trade that trend later on. So if we know that this trend is not complete, this overall pattern here is not complete, and we know where we may stand within that trend. We know that we may have completed wave 1 or close to completing wave 1 up in this C wave. Well, knowing where we stand within that trend means we know the point to where we should be lining up to trade, and that would be the wave 2 low. So we know we'd have moved back into trend in wave 1. We'll have a correction off the high into wave 2, and this will be where we'll get that higher low scenario and the lowest risk trade into a trend move in wave C. So now we know that this trend is incomplete. This trend move is incomplete. In the next video, I'm going to bring you through price targeting for trends, price targeting for wave structures in general. And we're going to use this market here again. I'm going to bring you through how this trend move has unfolded so far, the price targeting that I used while this was unfolding, and what predictions we can make for the future. So get on to module number 4, how to set price targets in Elliott wave theory.